Hello guys and welcome back to the channel again. Today we're back with a fresh video on how I predicted shorts when everybody was long in the market. So it will be a very quick video and I advise you before watching this video to go watch the previous video, which was the standard deviations video, an explanation on my model that I use using standard deviations, so you can understand today's video very well. So jumping directly into it. So this was price action on the 4 hour at Thursday. What I market first, and I guess all of you saw, is that we had this 4 hour fair value gap here. After we had this 4 hour fair value gap, we already tapped in it the first time at Monday 29th June. And then we swept this low, I guess Thursday. Asia session of Thursday. So basically after we swept it, and as I always share with you on my setups, a sweep on a higher time frame PD array with a rejection like the one that this 4 hour candle did will usually have a strong reaction to the opposite side or a beginning of a reversal. If not a reversal, it will be a retracement. So it usually happens. Sometimes it's just keep dumping through it, but it usually happens that we retrace first. So what I did, I went down to see if there is anything on the 1 hour, if there is actually some manipulation leg that can let me catch the standard deviations. Then you can see here the 1 hour, I couldn't find anything to catch standard deviations of, so I went down to the 15-minute. Sorry, let me remove this. So as you can see here, this is the 15-minute. This is the leg that swept that low on the higher time frame. So when I wanted to take standard deviations from it, I went to the low. The low was actually this one. You can see here the low. I'll mark it with the orange color. And then I went to catch my standard deviations like I always do. So this was my standard deviations. Let's extend them to the right, so you can see where market tapped. So you can see here that at first time market tapped at the 2.25 and then gave this retracement. People at the open, which was here, this was the first candle of the open, this one, started long in the market because they saw bullish signs on the lower time frames. Let's go down to the 1 minute so I can show you. Let's go just to the 5. You can see here that this was the candle of the open, this one. You can see here that in the open, the first 1 hour almost after the open was all of it bullish, and it had bullish signs. Myself, I was waiting because I wasn't convinced that market is just going to rip it off and go ahead and sweep the high again. So I was waiting to see more confirmation on higher prices and to see what market is going to do next. So while watching price action, now we have to go down to the 1 minute. So let me put this one here just so I can remember where it is after swooping down to the 1 minute. Okay, so this is the 1 minute. Let's go back. And then up. So here it was 10 a.m. first minutes. So I spotted a MSMT inside of these standard deviations. Let's remove this one and keep this one. This was the high. Remember, guys, this was the high. People were all taking long positions from here. Someone's bottom checked them from the low. Some ones I saw on Twitter too took the longs from here, but they all failed at the end. So the reason why we had the model and the concept that I always explain, which was standard deviations plus SMT. It's like a superpower combo that if you spot it on your chart, it's literally 95% it's gonna give a strong reaction, if not a reversal. So I spotted the SMT here. It was an SMT with ES. Then I spotted my breaker block, just like I explained the last video. So this is the wick of the breaker block. You can see here that market closed below it. You can see here, this is our breaker block here in the red color. So what I did, I positioned myself in shorts right here. And then first standard deviations that I had were the one that were on the 1 minute, yeah. So it was this ones. So my first zone and my first targets were principally this low first. Let's make it green. And then this low, because it almost came convenient with the -4, and this one because it came close to the -2.5. Now let's go back up to the 5 minutes. Or sorry, I guess it was. I'm not sure where the other deviations were actually these ones, because we had an SMT with this high too, with ES. ES took already the high of decision. So basically we had a double SMT. So my next standard deviations were these ones. Let's remove some shit from our chart so you can see clearly the idea. So basically we already had the first ones, no need to keep them. So you can see here, and this is the -2.5, and let's driving. This is the -1. So what I did actually is that at the low, or at the first low, which was this one, the first low of the session, this one, I took almost 80% of my position at this low. And then I held a runner. Who knows? I just said like that. Who knows? Maybe we go to the next zone of standard deviations that was on the -2.5 in the 5 minute, which was this one. You might see this as a huge unrealistic trades, but I can assure you guys that I spotted this one before happening and took it actually. Although I didn't take it with my full size, I just hold some runners, but it still was the trade of the day. So you can see here that first, in like to sum it up, you can see that we had first standard deviations from that 1 hour, 4 hour that I showed you. We took the standard deviations from the 5 minutes, but the low was spotted on the 4 hour. And then at this zone, we actually expected some retracement or some reversal, We waited for more confirmation. We spotted this SMT, or this double SMT, the one on the 1 minute and the one on the 5 minute. We had our standard deviations on the 1 minute and on the 5 minute. The one of the 1 minute, our target was this one, our last target actually. And the one on the 5 minute, our target was still very, very down here. And it actually happened, and the market hit its last target. And let's see now what market did after hitting the minus 2.5, which was this one. It hit it here, hit it here, and then market started pushing up, making a reversal, and it's probably will be going or heading towards the origin of the move, which is the high of the SMT, which is this one actually. So hope you guys understood this trade and how majestic it was. And that was all for our video today. See you on the next.